everyone, to the Firing the Man podcast. On today's episode, we have the privilege to interview Ismail Rixson. Ismail was on the podcast way back in episode 88, and he is back with us today to cover the State of the Market 2022. Today, we got you on the show. There's a 2020 mid-year report for 2022 that FE International publishes. Can you speak a little bit about that? And is that like an annual report, or and where can people find that?
So we publish at least 2 reports per year. And I think, the reason that we've done that, and we've probably done that for the last, I'd say 2.5, 3 years, is that, as you know, with the internet and blogs and threads and forums and everything else, there's a lot of very, very good information out there, but sometimes it can either be a little bit convoluted or just a lot to go through. So we have tried to distill that down as best we can in the form of market reports. And with my kind of background in investment banking, research notes tend to be a very good way of communicating what's going on as kind of in terms of a state of the union, if you would. But yeah, I think that was the main purpose behind it. And then we have just a huge amount of data internally. I mean, we're a very data-driven organization in terms of the way we look at deals. I mean, we've valued, I think over 25,000 companies at this point in time, and we've sold over 1,200 companies with a very high success rate. So we have a lot of data that isn't available in PitchBook or Crunchbase or those type of places of what's going on with businesses, I would say, in the kind of 1 to 100 million range that often just isn't available elsewhere. So the idea is that we want to kind of put as much of that data out as possible, give people, the information that they need to make informed and educated decisions if you're on the sell side or the buy side, and kind of give a real view into what's happening at this level of the market. So yeah, that's now a biannual report that we publish. We do separate ones. So we do one for e-commerce specifically, one for SaaS, and then one for content, as they all have their kind of different nuances and different things that are relevant to each. But that's something that we spend at least, I would say, to publish a report, it takes us at least 2 to 3 months of work to kind of go into that. So they are usually very in depth and quite considered once we actually put them out.
It's been a couple of crazy years. There's been ups and downs all over the place. So are people still buying businesses?
Yes. I mean, the good news is that they are. I would say that this part of the market is relatively isolated from what you see on a macroeconomic basis. So, I mean, I completely... very, very aware that interest rates are skyrocketing, as is inflation, and a lot of nervous people out there. And I guess for a lot of people, I mean, a lot of the conversations that we've been having, or I've had specifically, especially on the sell side, is that exact. Are people still buying? Because instinctively, if you were a ultra high net worth individual looking to acquire businesses, you may pause for a second and say, well, maybe I want to see if multiples come down. Maybe I want to see how deal structuring looks going forwards. But the reality of it is that ultra high net worth individuals make up a very, very small percentage of the people that we sell businesses to, and I suspect that's indicative of the rest of the market as well.
So digging into e-com M&A a little bit more. So let's so a couple questions that I had is, are deals now, it sounds like the deal flow is going now, is it getting more expensive to get capital? But I guess if you're going with family office or somewhere else, then that it really doesn't matter. But are the deals taking longer to close, or is there anybody doing more diligence, or is that about the same?
Yeah, I mean, I would say it's pretty consistent. I mean, you hit the nail on the head there. It does come down to the source of financing ultimately, because if you're kind of more on the private equity or let's say aggregator, or and I'm sure we'll get into them, but into institutionals, I mean, you have pretty much locked up your money much earlier in the year, or you've taken it from LPs or those kind of places. So it doesn't necessarily affect you so much.
That's very interesting. I think at least a lot of people in our network, in the FBA space, kind of looking to take our FBA native Amazon brand and go in Shopify or, D2C. Now, without getting into the weeds and specifics, obviously, but what do you think a straight FBA multiple, let's say for 1 million, let's say 500K in EBITDA, what kind of a multiple how high would the multiple go if the brand showed, say, 10, 20%, 30% D2C sales channels on Shopify?
Yeah, I mean, so there's two elements to it. Firstly, it impacts the multiple and it impacts the deal structure because there's less perceived risk if you're running that profitably as well. But yeah, I think that multiple wise, we haven't seen a huge markdown in terms of what was happening. I think last I was on the show, we're still looking at somewhere in that kind of 4 to 6 times range, trailing 12 months, I would say. And then in terms of deal structure, I mean, the more you can kind of move away from Amazon as a pure brand, the more kind of cash consideration you're going to get up front for a business like that. But ultimately, it comes down to each business, and the usual caveats of forward-looking, projections and all those bits as well. But if you looked at two businesses side by side, and one of them had 30% D2C, and one of them was 100% Amazon, and so in one context, one of them had figured out the D2C supply chain, had figured out how to make a solid return on ad spend through that particular channel as well, and you own more of the customer data, you are nearly always going to trade at a similar business, just purely FBA. So, but again, I mean, that comes with time, that comes with effort, that comes with R&D, that comes with ad spend, and some of it you may get back, some of it you may not get back. So it's really risk reward. So that's really what you're looking at there. And businesses that have managed to make a pivot into that area will attract more buyers. They're much more likely to attract more private equity and institutional money, as well as just strategic interest, which means that if anything, there's going to be a greater critical mass of people looking to acquire that particular business, which doesn't mean multiples go out the window, but it starts to mean you are going to get into that more competitive process where the multiple and the ultimate offer in terms are more likely to get pushed up than a business that is just purely FBA.
For anyone that's listening, who is a good fit for FE International to help out?
Like I said earlier, I mean, we deal with e-commerce, SaaS, and content businesses. And the reason we deal with all three is that, oftentimes, founders, especially successful founders, may kind of go between different business models or try different things, over time. Our deal size is usually somewhere between 1 to 100 million.